Welcome to digithustler.com. In this video, we are going to be discussing the Relative Strength Index, also known as the RSI Indicator. Now, this indicator is a must-have for all traders. It is by far one of the most popular indicators, and when used in adjunction to other indicators, you could provide yourself a better aspect of what the market is doing. So what we're going to get started on is, I want you to think of this indicator, this gray band you see in front of you right now. I want you to think of it as a rubber band. When you pull down on the band, it's going to snap up, and when you pull up on the band, it's going to snap down. Okay, so let's go over what exactly is the Relative Strength Index and how it is measured. So the RSI is a momentum oscillator. It measures the speed and change of price movements, and it oscillates between 0 and 100. Now, if you look on the right side of the indicator, you'll see the measurements right here, all the way from 0 to 100. Okay, and in the middle of this band is 50. 50 is the exact middle. Okay, I highlighted it in purple, and whenever the price is above 50, it is considered bullish. Whenever it's below 50, it's considered bearish. And whenever it's on the outside of the top part of the band, it's considered overbought. And whenever it's outside the band on the bottom side, it's considered oversold. So how RSI, the strength, is calculated is by it takes the price of one asset and dividing it by another. This number is given context when it is compared to the previous levels of relative strength. So the biggest things to know about where the strength is you're going to be looking for oversold territory and overbought territory. Overbought territory is anything that ranks 70 and higher. When something is overbought, the strength has become too high, and trends always reverse. What goes up must come down, and what comes down must go up. So when something is in overbought territory, there's a big chance it won't remain there for long before, just like I said before, think of this indicator as a rubber band. If you pull up on the rubber band, it's going to snap down. If you pull down on a rubber band, it's going to snap back up. So let's continue about overbought and oversold territory. Okay, so if you look on the top of the indicator, you'll see these three peaks. Okay, all these ranges, actually 4 right here. Okay, all these areas are overbought. So what this indicates is, like it's going to snap back down, this will be a good opportunity to sell, to get out of a trade and wait to buy back in. Okay, and on the bottom, as you can see down here, this is oversold. Okay, so again, when it's oversold, just like the rubber band, it's being pulled down, the strength's being pulled down too much, it's going to snap back right back up. Okay, now again, always use this indicator in adjunction with other indicators. Using one indicator alone is not good enough. You can never rely on just one indicator. So if you look on the right here, where it says, you can see from 0 to 100 the measurements. Okay, whenever the price action is sitting inside of the rubber band, inside of this band here, if it's below 50, if it's between 50 and 30, the price is bearish. If it's between 50 and 70, the price is bullish. The momentum's bullish, right? In general terms. And when it's above 70, it's overbought. It might be time to sell. When it's oversold, it's below 30 and below is considered oversold. It might be a good opportunity to buy. Now there's another thing we could do to help us read this indicator in terms of finding support for its strength, or if it's losing support in its strength, okay? And you're also going to find supports and resistances in this price action, in this measurement right here. So this is the perfect example. Right now we're on a daily candle chart, okay? Now if you look on the bottom here, you'll see one low, then we have a higher low, higher low, higher low. Whenever you have a series of higher lows and higher highs, right? All these are higher highs. This is a good sign that it's bullish, okay? And let me point these out for you a little bit better. As you can see, these are, this shows that the strength is gaining support along its way up. It's developing a channel, okay, until it gets into overbought territory. Now it's at the top. The strength has become too high. It's just way overbought. It needs to come down, okay? So on the flip side of that, we see now you can count the lower lows, the lower highs. As you can see, it begins to lose strength right here. Each peak gets a little bit lower than a previous one, okay? We also find a complete drop in strength. We see the trend. It's developing lower lows and lower highs. This is a bearish pattern, okay? So let's circle these right here. We see a lower low, lower low, lower low, lower low, okay? These are bearish signs. Now we're back in the oversold territory. And when something's oversold, the strength has gone too low. It's a perfect opportunity for buyers, for traders to get in on a trade. Okay. So what's going to happen? It's going to snap back up. And I believe right now, as of today, which is the 26th of November, 2019, Bitcoin's currently sitting at 7150. Most likely, in my opinion, due to other indicators I read previously today, I believe Bitcoin may possibly dump to about 6,500 to 5,800 region. But if you look at this indicator right now, we might possibly be forming a head and shoulders pattern in the near future. Okay, but we'll talk inverted head and shoulders pattern in the near future, which is usually a bullish sign. Okay, so you could also read patterns like this off of strength, but you read it along with other indicators and price action as it is too, okay? So that's about it for the RSI. We're keeping a quick tutorial for you guys. Don't forget to check out our site, digitalhustler.com. We have tons of great content, and we will see you soon on the next video. Thank you.